This is the Rich Dad StockCast with Andy Tanner, the show that kicks 401ks in the asphalt and teaches you to be the master of your own stock investing domain. And here's your host, Greg Arthur.
All right, welcome to the show. I want to make sure everybody knows the date of this show because it's going to be very time sensitive. So today's date is May 20th, 2021. And the reason I'm saying it's time sensitive is because Bitcoin's it's put us all through the loop. It's like wringing us out dry, and then it's killing me. It's a huge roller coaster. So just a couple days ago, well, first let me take you back. About a week ago, what's the Tesla guy?
Elon Musk.
Elon Musk, basically comes out with, I hate Bitcoin all of a sudden. It's not green enough, which is ironic since the lithium batteries are horrible. But anyways, and then just like 2-3 days ago, the Chinese government said, no more cryptocurrencies at all. You can't use them. You can't trade them. You can't do any banking with them, which is also ironic since I understand China to be the largest Bitcoin miner in the world. But take all that out, and basically Bitcoin went from 60,000 roughly dollar value to today it's dropped to right around $30,000 value. And it's not just Bitcoin. Most of the cryptocurrencies are following path, not all of them, but Bitcoin tends to be the leader and the rest seem to follow. So that's what's going on today. Now, we're a StockCast show, but we do want to make sure we're talking about relevant topics. So we've asked Andy to come on and kind of explain what's going on with Bitcoin a little, how it's comparing to gold, since they both have a very similar objective. And then really what's going on with the stock market? How is it being affected? And then lastly, what's going on with the dollar and all this rigmarole and roller coasters? And it's like a crash up derby from all I can see. Yeah. So Andy, if you could give us just maybe start with, from an investor's eyes, not a trader, but an investor's eyes, what is the purpose of Bitcoin and the purpose of gold?
Well, these are great questions, all of them, Greg, and they are time sensitive. Things are moving very fast right now. But let's start with what is the purpose of Bitcoin? Well, you probably want to ask the Bitcoin people that. But from what I gather, the first purpose would be as a currency. And that means it should move, which is really interesting. Forex is hard to trade. You can treat currencies as an investment, right? I can go hold lira. I can hold Polish zloty. I can hold dollars. I can hold Sing dollars, Canadian dollars, Aussie dollars, euros. But currency is really denotes movement, like a current, electric current, or current water. So when I think about currency in my life, I think the purpose of it is to purchase things. It's a medium exchange where I don't have to barter. So instead of bartering with gold or oil or corn or whatever I might have in my pantry, I can use a currency. So I would say that cryptocurrency should be used to purchase things. Now, you can buy a Tesla with crypto, and you can buy certain things with Bitcoin, but it's certainly not as accepted as euros and dollars and things. Yeah, in Europe maybe a little bit more, but in the United States, I bought a pizza with some crypto once at Papa John's. I think you could get on their website and buy their little gift card with Bitcoin if you want. So it's possible, but it's not generally accepted, right?
But how can it be a currency then? Like, it can't really move all that easily. Well, so how can it be a current?
It is a currency because you can use it as a medium of exchange, right? You can. Now, how widely it's accepted, is it a widely accepted currency? Fairly, not universally, but a lot of people will take Bitcoin. So I'd say, to answer the question, the first purpose is, in the name cryptocurrency, is it should be a medium exchange. The second thing I think, though, that a lot of people buy it for, their motive for buying it, it's my motive for having some, is as a hedge against a currency that might not be as valuable, right? The problem is this idea of movement. If I hold dollars and save them and I hold them, and inflation occurs, they lose value. And the hope is that if a dollar loses value, the crypto would retain theirs. However, here's the thing. The dollar is still the world reserve currency, and you're going to see some correlation there, I think. For example, Bitcoin goes big. What if things get more expensive? I'm going to ask for more Bitcoins just as I am. See, right now, when someone says, how much Bitcoin should I accept? They're going to say, well, what is it in dollars? Right? I mean, if I'm going to collect rent in Bitcoin right now, I'll say, well, what was the rent in dollars? Do the math and charge that much Bitcoin. So it's still, in my opinion, it's still about the dollar. It's still kind of tied to a dollar. Even though there's a lot more Bitcoins now, Bitcoin per dollar has gone up. Recently, it's dropped a little bit with inflation. So the second one is to hedge against inflation. That's why I reluctantly bought some. I've lost some money in it now. I bought some at 17,000. I bought some around 30. So I'm down maybe just a hair today on some of it, but not too bad.
Well, that's
but I
buys it.
I think my worst investment in Bitcoin, the one I always, in my mentor club, I say this is the one I hate the most, is I bought some ETF Bitcoin. I bought some BTC, and I hate that because it's not optionable and doesn't pay dividend. We'll talk about why that's my least favorite investment. But I felt compelled to buy it because I don't, I don't know what will happen with Bitcoin, and I think it's enough of a thing from what I've studied that it can be a legitimate hedge. Now, so we have two reasons so far. We have, as a currency, I want a different way to buy stuff, and that's convenient, and it's portable, and I can go around the world with it, and great. Second is as a hedge against a falling dollar. There's an idea that I don't buy into very much, that Bitcoin can be the end of central banks. And I struggle with that, because the thing I believe about power is if you look at MMT, that's about power. And the US government cares about its power, and it's got a lot of guns. And I kind of tend to say, when it comes down, when we move from social to primal, when people stop being social creatures, turn into primal creatures, the guns are kind of who decides who has the power, unfortunately. And, I've been a critic of, not a critic, but I've offered two sides. Everyone gets so enamored with Bitcoin that I've tried to say, well, it's the same with stocks. People get enamored with stocks and they become dogmatic. Well, stocks are great. Oh, there's things you ought to know that make stocks not so great. Well, real estate's the best investment. Well, there's things about real estate you ought to know that can make it suck sometimes. And, Bitcoin is the darling of everyone. Well, Bitcoin's going to take down the central banks. Not if the government creates a law that you can't use it, or if the government says we're going to tax it now at a special rate, or if the government says you're going to have to declare all your Bitcoin now in your taxes, and we're going to evaluate how much of that we want. So as long as you're paying taxes, and the government has the ability to throw you in prison if you don't, then the government will retain the power. That's why I hate MMT so much, because it's based on the threat of jail, and that your monetary system becomes, that the dollar's value basically is tied to their ability to throw you in jail and tax you to keep the demand up for it. So Bitcoin, can they take down the US government? Well, you mentioned China. Does China want to give up its power? I mean, all they got to do is say, can't use Bitcoin here. It's illegal to use Bitcoin. I can't use Mexican pesos here. They don't accept them. It's, I can't pay my taxes in pesos. And so if the government says you can't pay your taxes in Bitcoin, you need US dollars, and we're just going to raise your taxes, that's going to create a demand for US dollars. And, what are you going to do, with your Bitcoin then? So the ability to establish monetary policy and fiscal policy and tax policy, really gets in the way of, we're going to take down all the central banks with Bitcoin. Because all they get, if it gets too big and it becomes an irritant to them, they just make a law that changes it. and that's called political risk, right? That's called, they have geographic risk and all kinds of different interest rate risk, well, obsolescence risk. Well, you have political risk. And I see obsolescence risk with Bitcoin in that technology is moving so fast that blockchain is not the end, it's a protocol. Well, blockchain might be the word perfect of word processors, right? Of cryptos. It might be the first cool one, but it might be in the wayside because word perfect was awesome when it first came out, but now it's not even used. Lotus, Quattro Pro, Netscape, browsers. Netscape was the biggest browser ever. Who uses Netscape anymore? So I see that this is a real good opportunity to say, look, Bitcoin's volatile as hell. I mean, it just lost half its value in, I haven't looked, but probably since November or March or whatever it was. When did it let's see, it looks like Bitcoin was hit its peak in February. And let's just look it up here. BATC, we'll look at the ETF, that's a quicker chart. So it hit its high on the 19th of February, just shy of 60,000 for Bitcoin. Yesterday it had a low of 28, so it got cut in half. That's huge volatility. So that's the second. The third reason people buy Bitcoin is to speculate. I think that's the dumbest way to use it, is I'm going to buy it at 30 and sell it at 100,000, or whatever. And that might prove to be the smartest thing you could do. But people that do that are probably more lucky than smart. I don't know, Robert really likes Bitcoin, but I think he likes it for number two. I think he likes it as the hedge. I think he likes Bitcoin because he doesn't like the dollar. And
exactly. He is so sure the Federal Reserve is going to keep printing money, the dollar, that it's going to kill its value.
I think he's right. I think they are going to print money. I think MMT is happening as we speak. And so that's why I bought a little Bitcoin, but I've also bought a little gold. And that brings up a real good point, is where are you going to hedge your money? Gold's killing it right now, right? So here you have an inverse correlation. It's fascinating between gold and Bitcoin in the last 2 months. So really in the spring.
Can I dig into that? So Robert has always been a gold bug forever.
Me too.
And then I'm not going to say he switched. He's still buying gold, but he switched which one he's buying more. And he started buying way more Bitcoin than gold. So they seem to almost be inversely related. If you buy gold, you're not buying Bitcoin. And if you buy Bitcoin, you're not buying gold.
No, the analogy, and I might be out kicking my coverage here of what I know, but I'll with that caveat, I'll talk about things that I think I know, but not sure that I know. I mean, I'm a student, and I hate it when guys act like they have all the answers, because I certainly don't. I'm a student figuring this out like anyone else. But my feeling is let's look at an industry like computers. And if, let's say Hewlett Packard comes out with some great sales numbers, that can mean one of two things. It could mean people are buying more computers generally, and they're enjoying that boom where a rising tide raises all the ships. And I might say, well, gee, Apple's probably going to have a great earnings next week, and so will Dell or whoever, right? Whatever company you want to look at. Then you look at the market share. It could be that Hewlett Packard did well because they've stolen market share from Apple, right? So, is the hedging environment, the anti-dollar environment, growing at a rate to where both gold and Bitcoin can flourish? Or is there a limit to those people who really hate the dollar to where, I'm going to sell off some of my gold to buy some Bitcoin, or I think, what, Bitcoin's up, I think I'd like to sell that and buy some gold, and there's market share.
So what do the charts tell you?
Well, to me, and it could be deceptive, it could be a lot more than this. I look at Bitcoin falling and gold rising. So we know that's happening, which means money's going into gold and money's going out of Bitcoin. That we know, right? There's just not a demand for Bitcoin and a bigger demand for gold. And it really doesn't matter why that is, because that's the fact, right? Why? Well, it doesn't matter why. It's what's happening now.
Right.
And and so it's fun to speculate as to why. It could be that Bitcoin hit some highs, and volatile investments do this. They'll go up and people will start to sell out, and it creates more selling. And when you have algorithms in a very volatile thing, if the algorithms see a trend down, it can feed on itself, and it can go up really fast and down really fast because of algorithms. It could be that people are just taking profit, and that's triggering more selling. It could bounce back up. Some people say if you miss the pop, wait for the drop. Well, you probably got some pretty decent support here on Bitcoin around little under $30,000 a coin. And you had a real big strong candle yesterday at that support level that's bounced up. So, it could be a buying opportunity for Bitcoin from a technical perspective. Bitcoin's had tremendous volatility before. I'm not selling mine. I'm going to hold mine.
Right.
Because I'm holding it as a hedge. I might lose all my money in Bitcoin. It goes to zero. Well, that's the risk I'm willing to take because I think I need to have some of it.
All right. I have another question for you.
Yeah.
You were using stock jargon. It's hit the ceiling. It's hit the floor. Candles. Blah blah blah.
Yeah.
So,
That's
how does Bitcoin? It's traded similar to stock, or at least you measured similar to stock, from what I can tell. But how does it compare to the market?
And I would beg to say that that's really not stock jargon. That's called technical analysis jargon. One of the fights that I fight constantly as a rich dad advisor of paper assets is everything that comes out of my mouth seems to be that's paper asset. Not true. My 4 pillars class is a financial education class that's every bit as valuable for real estate investors as stock investor. It really is. What we're really talking about is trends, and gasoline has this, housing has this, oil has this, corn has this, stocks has this, currencies have it, and Bitcoin has it. So the jargon of support and resistance as a technical analyst is far outside of just stocks. It's commodities, it's currencies, it's real estate. I can bring up a real estate chart and see the same thing. I can bring up business charts, see the same thing. I can even bring up volatility charts and see the same thing. So understanding support and resistance of charts is it's not everything, but it's part of your investor education, I suppose.
Okay, I'm going to interrupt you again, and then maybe get into the comparison with stock market. But I do want to give you a little plug here because I have taken your course, and I just want to give you a plug that in your 4 pillars course, you make it really clear what these words mean.
Jargon.
Like, because I went into that course not knowing anything. So, and you really teach trends as well as fundamental investing. So anyone just listening, it's in the show notes, but I just highly recommend taking Andy's 4 pillar course. It's incredibly valuable, not just for stocks, but to understand the whole principles of investing in general.
Yeah, when it comes to Bitcoin, we talked about 3 reasons people might have it. 1 is just to use as a currency. I'm fine with that. 2 is a hedge. That's the reason I buy it. I'm not using it as a currency. I'm buying as a hedge against the dollar. And the 3rd one is you could trade it. And if you're going to trade it right now, you'd have to trade it more technically than fundamentally, probably. And you'd want to have an entry, an exit, and a target. And you'd have to be okay with losing a little to try to gain a little. And that's how you'd want to trade that. The options on it, are not in the most popular places, like the SIBO doesn't option it, but there are option houses that'll option it, but the spreads are pretty wide. It hasn't attracted me yet. So that's Bitcoin, and it's going to be volatile. Do I think it's big? Do I think the high of Bitcoin in history is going to be $55,000, $60,000 coin? No, I think it'll go higher, but that's just an opinion. I could be absolutely wrong with that.
Sure.
And people that think they know everything aren't very smart. Everything can drop, everything can go away, everything can change. We used to use seashells and tally sticks instead of gold, and we don't use those anymore. It would have been funny when we go on a gold standard, people say, well, we've always used tally sticks before, gold isn't money. Well, it changes. So to escape dogma is our job, is to not get enamored and prideful and personally invested into any investment, including stocks.
So yeah, let's get to that. While Bitcoin's on the roller coaster, the stock market is doing
It's going great.
going great.
And there's a reason for that. The stock market's killing it. I mean, when Warren Buffett, this is what's crazy is there's a real big detachment from corporate fundamentals and stock prices. And what I mean by that jargon is, if you have a jack in the box that turns the crank and makes you $1, and for the last 100 years, people have been willing to pay maybe $15 for that box that'll, for that golden goose that produces that from a cash flow standpoint, from an earnings standpoint, PE, price earnings standpoint. Traditionally, you got a mean of about $15 to buy a dollar in the S&P. Now you're at like 37. So they're expensive relative to history from an earnings standpoint. So there's a bit of a detachment that way fundamentally from earnings. But sovereign fundamentals, it's cheap. And Buffett and Munger, especially Buffett, has said, if we go MMT and we keep printing and borrowing, stocks are ridiculously cheap in that context. So your four pillars of fundamentals, technicals, cash flow, risk management, that fundamentals, you have to weigh both the sovereign level stuff and the corporate level stuff. And right
Just
now,
a little clarity
sovereign's
there.
controlling it. Huh?
Just a little clarity there. The reason stocks are so cheap right now by this MMT theory is because inflation is going to hit so heavy.
That's right.
Really, everything is cheap right now.
Yeah, I mean, everything. I mean, and inflation's happening. Warren Buffett warned about this at his investor meeting at Berkshire Hathaway. I'm warned about it. Look at lumber. I mean, if you got a piece of plywood, you can go buy a Ferrari in 2 weeks. I mean, it's happening. Inflation's here. It's happening big time. And the MMT guys, they're going to keep borrowing money. And he said it's a scary time for consumers and savers because gas prices are going up now. Coronavirus is kind of winding down. People are going to start wanting to go places and do things. Gas is going to get out of control. Housing is completely insane right now. Construction costs are insane. You're starting to see inflation leak, not just out of the assets now, but into consumables and into the consumer. And that's when it gets kind of frightening for non-educated investors.
Okay,
So,
I want to interrupt you again.
It's killing it. It's killing it because of the Fed. I mean, if you're passing out money, okay, and you're giving people stimulus checks and passing out money, that's gonna go into corporate profits because people are going to spend that money. They're going to spend it on going to Disneyland. They're going to spend it on a new Apple computer. They're going to spend it on picking up another phone. That people are going to spend it. And when you have interest rates low, they'll borrow money and spend it. When you just give money out, they'll spend it. And that's going to be a boon to gross domestic product. And that's a boon for the stock market, plain and simple.
Okay, I want to ask you this question because I know you're smarter than me. There's no doubt there. But it sounded like I heard a contradiction. So with inflation rising, it kind of carries everything up with it, including the stock market. But how can we say that while Bitcoin is falling? Like, why isn't inflation affecting Bitcoin?
Well, the stocks are not a currency, are they?
Gotcha.
So I'm not trading my stocks for stuff where I would need more stuff for less, right? I'm trading dollars for stuff. So as the dollar's getting weaker, right, that means it doesn't go as far. And if Bitcoin's getting weaker, that means it doesn't go as far. I need more Bitcoins now than I did in February. I need twice as many Bitcoins now than I did in February. It's lost half its value. Does that make sense?
Yeah, so that's why gold can rise because it's not a currency.
Gold has increased its value. I can buy a lot more stuff with gold now than I could with gold 2 months ago.
Gotcha.
So gold has increased its value. Bitcoin and the dollar have decreased in their value since in the spring. And the argument for stocks is similar to the argument for real estate in that why, Warren Buffett, why does he not buy gold? Everyone thought when he bought some Barrick shares, he was buying gold. No, he bought a business. Again, he did not buy gold. He bought a business. And Warren Buffett has always said a business will beat gold every time. And the reason that's true and will continue to be true, and it'll beat Bitcoin too, is because Bitcoin doesn't create anything and neither does gold. It sits there. It's limited in its supply, so it's a hedge, but it's not a production of cash flow monthly. It is so hard for non-educated people to understand the difference between capital gain and cash flow. It's so hard for them because they are so capital gained in their 401ks. My 401ks value is going up. They're always looking at the value of the investments, not the cash flow they spit off. You know, you look at a company like Coca-Cola, you know, on your shirt right there. Okay, those guys sell billions of drinks every month. If they raise their prices by a penny, they just made how many $1 billion that quick? They have so much power because every month we're going to consume that. Gold we don't consume. You know, we might make a circuit board out of it, recycle it, or make a watch, but by and large, the gold in Fort Knox is not consumed. It sits there, right? The gold in the Bank of England sits there. The gold that China has sits there. Doesn't produce anything. Real estate sits there, but it produces housing and rent checks. So you have the value of the house going up and down, fine, but it's the rent it's the dividends from the stock. It's the rents that bring the cash flow in. So Buffett's like, why would I want to buy gold that the only way I can make money on it is buy it low, sell it high, and have to play that game, where I can buy Apple that's creating a new iPhone every freaking year, right? That has Apple Pay that people are using all the time, that has Apple TV doing entertainment business all the time. I mean, they're a consumer company now with their hands in so many pots. Apple's like the coolest company in the world. Why wouldn't you want to own that? Because it's producing cash. So as an investor, I say, well, yeah, I hate the dollar. I want to have some gold and some Bitcoin to offset my dollars, but I really want to have money in stocks that produce income and produce things, because if inflation happens, prices will go up. That's good for me.
Right. That makes a lot of sense. Just the simple concept of cash flow versus capital gains, where Bitcoin right now, Bitcoin and gold are really just capital gains plays in addition to the hedge.
Yeah.
But with stocks and real estate, you can cash flow those and really outperform, and business, I should say.
Yeah. The biggest thing I would say is I've been doing webinars. My webinar theme lately on the webinars I've been doing, Gregor, how to invest in a bubble. And what is a bubble? A bubble is when the value of something is inflated and it's hollow inside. There's nothing of substance to really hold that. It's inflated and it can pop very easily when it gets too big. So Bitcoin was in a bubble, wasn't it? It popped and now it's lost half the value. It needs to inflate again. Well, the stock market could real estate and stocks, assets could be in a bubble huge because of this printed money. Because when that printed money, if you look at Zimbabwe, when they hyperinflated, their stock market went up. And then when everything was down, everything was down. Their currency was down, their economy was down, their GDP was down, their revenues were down, their stock market was down. So, are we in a bubble right now? You could make a great argument that we are, that we're propping things up with money that's printed and it's making the rich richer, but will it last? And so, risk management is so important here. I don't want to get too far off our topic from Bitcoin, gold, the dollar, and stocks, because that's really what we're talking about. But the big picture is really what will win, inflation or deflation. That's the core of how you position yourself. So in my family, I'm trying to create a plan for both because I don't know which one will win. Robert says inflation's going to happen, right? But the reason we haven't had inflation is we have so much deflationary pressure to match the inflationary pressure, that for every bit, it's right now it's in equilibrium, and for every bit of inflation policy we have deflation environment, right? Which is why we haven't had. But the inflation, Robert seems to be like it looks like he could be right, because look at a piece of plywood right now. Look at food, and when it starts leaking into food and medicine, the dollar could lose value in a hurry. It could get ugly fast. So, It's a
So
very tense time right now. It really is. I mean, look, think about that. A sheet of plywood used to be what, $12? Now it's 50.
yeah,
That's legit inflation. That's not like a 10% increase. The Fed wants a 2% increase in inflation. They're going to have more than that. I think they're going to have a lot more than that. And that could be a drag on stocks, because if the Fed sees this inflation and says, okay, we got to get a handle on it, that means they'll raise interest rates. And that means the bubble in the market could shrink. I don't know if it bursts, but it could shrink, because we've seen when Jerome Powell years ago, pre-coronavirus, years ago, when he started raising the interest rates to reload his monetary policy, magazine for his gun, the market did not like it. It did not like it at all. So then he went to patience and said, well, I won't change it for a while.
right,
And then coronavirus, they just went right back down to free money.
right.
And the market loves free money.
Okay, Andy, in a second, we're going to summarize, but
Right.
you did mention something. You mentioned the webinars you're doing. So I want to make sure, yeah, you do free webinars, I believe, once a month.
Yeah, now not every month, but we try to get one a month out for those that there's always seems to be people that have the wake up call, like this is the month where I'm going to get educated. Something in their life happens. I mean, it's funny, when coronavirus hit, it broke our system. We had tens and tens of thousands of people trying. Oh, I want to learn right now. Coronavirus goes away, stock market's up, less so. And it's just the nature of people. But it seems that every month or so, someone in their own personal life says, this is it. I'm going to get smart. I'm looking around. I don't understand these things very well. I want to learn more. And they hop in. So we do webinars to show people, what's available to learn.
Well, I appreciate it. I've also seen a lot of your webinars. And so I want to make sure people know, I think there's definitely a link in the show notes to them. And I think when you click it, it actually gives you like 4 or 5 different webinar options that you can watch, so that the listeners can really just find the one that suits their interest, their needs the best. So I just want to make sure everybody knows those are there. They're free. Take advantage of Andy. He's here to be used and abused. So that's great.
Used and abused.
Yeah, that's why you're here, Andy. I don't know if you knew that. But take advantage of Andy. Hopefully you're learning enough from listening to Andy on the Stock Podcast to realize that there's so much more to it, and that Andy has so much more to give. So I really hope everyone takes that. And just to summarize, Andy,
yeah,
Bitcoin is dropping, gold is rising, the stock market's high, and the dollar's
losing value.
Losing. Okay.
And especially, what's really interesting is that everything's relative to everything else. The dollar is losing value relative to other currencies in the world. And the dollar's kind of been the darling of the world since Bretton Woods. It's petrodollars. It's how we trade commodities. It's the world's reserve currency. I think I read somewhere that still over half the currency in the world is a dollar, so it's pretty big. But yeah, the Bitcoin is a real deal. I'm not selling mine, and I may lose a lot of money on it. It's just one of those investments where I don't have a crystal ball, but I feel it's a big enough deal that I have to have some exposure to it. I'm not buying it like Robert is in Gangbusters. I'm saying I'm trying to buy as much as I think I would need, not trying to get rich off it. I would say, look, if the dollar goes to crap, how much Bitcoin do I want to have? I'd rather have more money in stocks, real estate, and business than I would in my hedging, in my gold, silver, and Bitcoin category. That's just me personally. I just like stocks. I like the idea of owning companies that produce things and collecting dividends and sharing in the profits of awesome companies like, Coke and, others that are available out there, Apple, stuff like that.
Andy, thanks once again. Really appreciate you.
I appreciate you, man. Fun conversation. Really, the volatility of this stuff speaks to the importance of what we attempt to do here each week.
Right.
And if people have questions, I'd encourage them to write them in the notes, so we can read them and address the things and teach what they want to learn. I don't have all the answers at all, but I have some.
Well, if I had to summarize your main answer, it's to get educated, which is why you do give the free education, why you have major courses. So I don't want to pitch you too heavy here, but they're all great.
They're always nice to me. But
Really.
in reality, it's just a mission. You know, we do okay, and you know, I always tell people I feel fortunate enough to go buy my kids an ice cream cone once in a while. I feel fortunate to be able to do that. But what really is the mission is to elevate the financial well-being of humanity, and humanity, you know, they have to do their part in that, which is come and learn. We won't force a man to heaven, but we can certainly help in a big way to make these things more simplified, if they give us the time to do it.
Well, thanks, Andy, and I will talk to you next week.
Good to see you, Greg.
Yeah, you
Great
too.
discussion today. Interesting times for sure.
Crazy. Thanks again.